Welcome to the deep dive. We're here to be your shortcut to, well, actually being well informed. We cut through all the noise, pull out the really essential stuff for you, and the world of cryptocurrency. Let's face it, it's incredibly dynamic, often complex, constantly shifting. So today we're really plunging into the most important recent developments. We want to give you a crystal clear picture of where digital assets stand right now. Our mission today, it's pretty straightforward. We've gone through a stack of financial news, economic reports, and some pretty crucial political analyses. We're calling this deep dive crypto crossroads, volatility, regulation, and political influence. We're really to explore how these powerful forces are, intertwining right at this moment.
Exactly. And our goal for you, the listener, is to shed light on these intersecting forces. It's like this intricate dance, right? Market movements, big policy shifts, and sometimes that subtle political maneuvering. All of that is actively shaping the crypto landscape. So by the end, you should have a much clearer sense of what's really driving this sector, beyond just the day-to-day headlines.
Okay, right. Let's kick things off with the market pulse because crypto is, well, famously all about those waves of volatility, isn't it? If you've been keeping an eye on the charts, you've probably seen some pretty dramatic price swings lately. Bitcoin, for instance, saw a nearly 8% drop over the past week. That's quite a dip. It went from a record high around $124,000 down to $113,643. That's a significant move for the king of crypto. But then on the flip side, you've got Ethereum showing some impressive resilience, gaining about 3% in just one day, trading around $4,289. These feel like, well, contrasting signals. How do we make sense of them? What are the real signals you're watching underneath all that price action?
Yeah, that's a great question. And what's truly interesting here is how these seemingly contradictory moves are being read by a lot of experts. Even Bitcoin's dip in this context, some see it as a sign of maybe cautious optimism, almost like a healthy market correction, a sign of potential recovery, not necessarily panic. It's not just random fluctuation. It reflects this underlying sentiment that the market is processing broader signals, maybe regulatory shifts, which I know we'll get into, or institutional news. These price movements are acting like, well, sophisticated gauges for overall investor confidence in the sector's health, really.
Ah, okay. So it's about looking beyond just the immediate percentage change. For you, the listener, understanding these market reactions isn't just about knowing the price number. It's more about trying to discern between genuine shifts and just the usual daily market noise. It helps you recognize when the sector might be truly realigning versus just having, a typical volatile Tuesday.
Right. Now, here's where the picture gets, I think, considerably more complex. The regulatory arena. This feels less like a clear path forward and maybe more like a global tug of war. And it's actively shaping crypto's future, often with some surprising twists. So on one side, you have European regulators. They seem to be really ramping up restrictive frameworks like their big MiCA legislation.
Right, the Markets and Crypto Assets Framework.
Right.
Exactly. That's Europe's landmark piece for crypto oversight. And they seem to be positioning themselves quite firmly against, say, stablecoins backed by the big tech giants, wary of their potential influence. But then you contrast that with the U.S., where, advocates are often championing innovation, pushing back against rules they see as too restrictive. This creates a genuine geopolitical tension around the future of digital money. It's quite fascinating. And speaking of stablecoins, Tether, obviously a major player, made a very strategic move recently. They've hired Bo Hines. He was formerly head of Trump's Crypto Advisory Council. Now he's their U.S. strategy lead.
Interesting hire.
Yeah, it's a clear signal, right? Tether is pushing hard to align itself with newly passed stablecoin regulations under the Genius Act.
Which is that bipartisan effort trying to create a framework for stablecoins in the U.S., how they're issued, backed, regulated.
Exactly. But the shifting sands, they don't stop there. We're also seeing some interesting moves from, the established financial powers, the Federal Reserve, for example. They're actually winding down their Novel Activity Supervision Program.
Yes, the post-FTX program.
That's the one. It was this enhanced regulatory review put in place for banks' crypto activities right after the FTX collapse. Now, some might see this winding down as a sign of progress, maybe a reduced regulatory burden. But couldn't it also be read differently? Like maybe a potential loosening of oversight that could reintroduce some risks?
That's a really crucial point, and it perfectly highlights the ongoing tension. If we connect this to the bigger picture, what we're witnessing is an industry really grappling with its own maturity, this whole confluence of events. You've got specific, sometimes restrictive rules like MiCA in Europe, then Tether making strategic hires to clearly aim for compliance, add the Fed's recalibration, and even grassroots groups pushing Congress for clearer rules. It all shows that global regulators are actively trying to define the boundaries of this space. But the critical thing to grasp here, I think, is that this global tug of war isn't just about rules on paper. It's quietly fragmenting the global crypto market. And why this matters for your engagement with digital assets is pretty significant. You might find, for instance, certain tokens or services easily available in Europe but blocked in the US or the other way around. This creates a complex, almost geofenced digital economy. Innovation gets shaped less by open competition and more by, well, national priorities and regulatory preferences.
Right, that regulatory chess game we just described. Especially with players like Tether making these kinds of strategic hires. It inevitably bleeds into the political landscape, doesn't it? How deeply integrated is crypto now with mainstream politics? It feels like it's everywhere, suddenly.
Oh, it's deeply integrated, and it's a relatively new phenomenon, this level of integration.
Yeah.
What we're seeing is crypto moving far beyond just being a niche topic. It's becoming a significant force in political fundraising, policy debates. It's really not just about the technology anymore. It's about power, influence, and frankly, the future of money itself. Think about the pushback against central bank digital currencies, CBDCs, from some political factions. That isn't just a financial argument. It's a deep philosophical debate about, individual sovereignty versus state control over money.
And we're seeing some really high-profile examples of this play out, like the Winklevoss twins, Tyler and Cameron. They've pledged a massive $21 million to create a new PAC, the Digital Freedom Fund.
21 million, wow.
Yeah. And this PAC is specifically designed to back Republicans who favor crypto legislation and, crucially, oppose CBDCs. That's a significant war chest being deployed directly into political campaigns. And it's not just the established crypto figures jumping in either. The Trump family is also getting into the mix. They're promoting a new token, WLFI, through an entity called World Liberty Financial. Apparently, this is mirroring Michael Saylor's Bitcoin treasury model,
where a company basically converts its cash reserves into Bitcoin, viewing it as a better store of value.
Exactly. Now, while some might herald that as a robust strategy, critics are already warning that this model, especially when linked to political figures, could be, well, unsustainable, potentially exploitative even.
And that's exactly why this isn't just about money anymore. It's about political messaging and leverage. It's complicated. We're also seeing a noticeable shift in political tones elsewhere. For example, Democrat Sherrod Brown's Senate campaign, historically more cautious, maybe even critical of crypto, is starting to soften its anti-crypto messaging a bit. Yeah, it's a telltale sign, I think, of how widely accepted or at least influential crypto is becoming across the political spectrum. And then you add the fact that you had Federal Reserve officials showing up at a Wyoming blockchain summit. You can clearly see this growing acceptance, but as you pointed out earlier, that acceptance often comes hand in hand with increased scrutiny, not necessarily less. So for you, the listener, recognizing these political undercurrents means you're better equipped. You can understand not just if a regulation passes, but maybe why it's being pushed and what vested interests might be behind it. It's about trying to see the full picture. Who benefits and who loses in this constantly evolving landscape.
Okay, let's bring the conversation back a bit to the financial world itself, because despite all this volatility we talked about and the regulatory wrangling, there's still this strong undercurrent of institutional investment and broader market activity. Take Gemini, the crypto exchange. They're actually going public, planning an IPO. This is despite reporting a massive $282.5 million net loss in the first half of 2025.
Wow, that's a big number.
Yeah, starkly higher than their $41.4 million loss from the year before. And this move comes amid this whole broader regulatory and financial realignment across the industry. But then on the other hand, you have firms like Rest7 Capital. They already manage nearly $1 billion in assets, and they're planning to raise an additional $100 million in Q4 2025 through a new multi-strategy fund. These seem like, well, contradictory facts, right? Significant losses here, yet continued even expanding institutional investment over there. How do we reconcile this?
Yeah, it does seem contradictory on the surface, but the underlying insight here is, I think, pretty crucial. Despite some really significant losses reported by companies like Gemini and all those regulatory hurdles we just discussed, the institutional appetite for crypto remains remarkably strong. This isn't just, speculative gambling by the big players anymore. It indicates a deep, long-term belief in the sector's potential. What we're likely seeing is a strategic realignment. Major financial players are sort of weathering the storm, making adjustments to their business models. And they're continuing to invest because they seem to envision a future where digital assets are a core, integrated part of the global financial system. So for you, understanding this institutional confidence is key. It helps you discern between maybe the short-term market noise and the longer-term conviction of these major players. It suggests that even amidst all the volatility, building a diversified portfolio that considers digital assets, well, it isn't just a speculative gamble for institutions anymore. It's becoming a strategic move, and that could increasingly influence the broader financial landscape and perhaps, your own investment considerations down the line.
Wow. What a journey we've just taken. We've navigated the market's inherent volatility. We explored that global regulatory tug of war. We highlighted the rising political influence and observed the continued, maybe sometimes cautious, but definitely present institutional interest. These intersecting themes really underscore the ever-evolving nature of the crypto sector, don't they? As it just relentlessly seeks legitimacy and stability. It's this constant dynamic process of adaptation.
Absolutely. And what truly stands out as we kind of wrap up this deep dive is just how quickly the narratives around cryptocurrency are shifting. It's really no longer just a fringe topic or a purely technical discussion, is it? It's become this complex interplay of rapid technological innovation, the relentless forces of financial markets, and now increasingly these powerful currents of political will. All these elements are just pushing and pulling, constantly shaping its future in real time. It's fascinating to watch.
It really is. And it leaves us with a big question, I think. As we move forward, how will that tension we talked about between innovation and control, how will that ultimately shape the future of digital money? And maybe what role do you think individual citizens, grassroots movements will play in that shaping beyond just the big institutions and the political players? Definitely something to mull over until our next deep dive.